knowing that a lot more people are going into the gig economy, sole proprietors, they're not going to have a W-2, so they will have a 1099 or on their 1040, they'll be sole proprietors.
Sure.
What is your tip to those who are self-employed or may own a small business?
Another great question. So I apologize in advance to all the self-employed parties out there. It's just the nature of the beast right now. When you have a pandemic, they're going to scrutinize the income solely. I mean, even W-2 people are getting scrutinized, but not to the degree that self-employment are. So an unfortunate part is that they want to make sure you're not draining your bank account. So they ask for bank statements and so forth. What we try to do is, I have a system that's called, it's H2O. That's kind of our digital application piece. But along with that, we have another system that's called LoanBeam. So it kind of foolproofs the tax return. We can actually run it through. We'll get your last 2 years of your tax returns. We can run it through. It'll average out the last 2 years and then give us an income. So it's dummy proof for us loan officers that aren't accountant savvy.
Okay,
but it's a great tool. I've used it so many times. Within a couple hours, we'll have the tax returns read, and then they'll give us a bead on what we need to put in the file, like K1s, or if we're missing anything. So it's really a great tool for anybody that's self-employed. And I'd say that would be the best step that you could take when you're looking at qualifying, is really get in and go to that next step, not the pre-qualification where you tell somebody what you think your net income is, but take it to the next step and have somebody read your tax returns before you go out looking at a property.
Yep, absolutely. So to summarize, if I may paraphrase, a little bit patience on the sole proprietors or those that are doing 1099s. Make sure you have good reporting or documentation on your 1040s, and those will be shared to your lender partner.
You got it. That's the best thing you could do. Just because, like I said, it's many loan officers aren't accountants. So having a tool like a LoanBeam in play is really good, and the ultimate decision comes from the underwriter anyway. So the beauty with Caliber is we can even take it one step further and do what's called a to be determined pre-approval. Many companies won't do that, which I think is a shame, and it's a lack of service for the client that really wants to know whether they're capable to purchase a property. And you get set up for failure in that sense, I think, especially with self-employed borrowers. So we'll take it one step. If there's any question, we'll take it to the underwriter and have them approve it. So you'll get a fully underwritten loan at that point.
Absolutely.